Welcome back to Brashenomics. Paul Pukis is back. Now, Paul is not only the author of Protect Yourself with Amy Druhl, but he also is the author of a article that just came out in the Snohomish County Business Journal. Welcome back, Paul.
Thank you.
How you doing?
I'm doing well.
Our tallest guest. That's the best part. If you're watching on video right now, you're going to get my chin and his forehead. But, you know, if we zoom in, you just, who knows, zoom out, you might get all of us.
They can see us really well on the radio right
now. They can. Which is good. So, Paul, how have things been going, man?
They've been going well. Hey, thanks for asking.
Yeah, life's good. How's the weather up there, you know?
Just wonderful.
Good. So talk to me a little bit about this article you just wrote, for the Business Journal. You're kind of about this. People think a lot about insurance on their home, on their car, but businesses have insurance too, and disasters can really strike your business.
Yeah. Well, what keeps America going is a small business, and that's owned by individuals that have homes and autos and the things that we need to protect personally. But I actually, the editor that I was working with on this said, you know what, I was in a conversation with someone that they heard that you can cover your employees if there's a loss to the business. And we started to talk a little bit more about that. And he says, man, I didn't know if like business income or something like that, a part of the policy, would cover my key employees. And he asked me to write about that. So that's the article you're referencing.
And so talk a little bit about it. I mean, if something goes wrong, it can really destroy your business. But so there's this element of keeping the employees?
Well, right. And what the editor was asking about is, if something goes wrong, and the example I used in the article was a restaurant. You have a restaurant, and you can replace restaurant with any business that you might own out there. And there is a disaster. There's a fire. And it's going to take time to rebuild your business. Well, what do you do with your employees that you had there? Do you just let them go and then hire back? I mean, that's only going to prolong the length of time it takes you to get ramped up again. And the statistics are out there that I believe it's 50% of businesses that suffer a loss, for a large loss, a fire or something like that, are out of business within the first year. And they're out, and 80% are out of business within 3 years. It takes a lot of effort to recover from something like that. And if the insurance policy you have is short on coverage when it comes to that type of thing, it's going to make recovering a lot more difficult.
Is there income protection? I mean, in mortgage and with rental properties, you have this 6 month rental loss, right? Mm-hmm. So if the house burns down, they can help you. Is the same thing true in business insurance, where if, the studio burns down or something here, there's an element of, we can still have advertising come in and things of that nature?
Well, there's the typical, what the endorsement is, or a part of the policy, is business income and extra expense. That's the term that's available. And business income, if you're out there with a standard business owner's policy, or if you have one of these policies out there, you'll know it as a BOP, might be what your agent refers to it as. And that comes packaged with a bunch of different stuff, and it comes with 12 months normally of standard business income replacement. So just to make things really simple, if you're making $1,000 a month, you can expect to, in net profit or in the income, you can expect to get $1,000 a month from your insurance company for the 12 months that you're out of business.
And so if you're a pizza shop and you sell, you make money selling pizza, then the insurance will cover you from that oven fire when you get that call at 3 o'clock in the morning because your restaurant's on fire. If
you have the coverage and if you have the right amount of coverage, that's correct.
You wrote here, it's kind of that, it takes away that fear of having a major issue, because and it does start to protect your family and your employees and all that. I mean, it's an interesting concept because you don't always think of protecting your income. It's like almost a short-term disability for a business.
Income is probably right now what most people have to protect. The value of their homes are down. They're probably driving their cars longer than they've driven.
I can promise you I'm doing that.
Well, people used to replace their cars every 3 years, so you had full coverage. I'm going to get in trouble for using the term full coverage, but you've got other than collision and collision coverage on there to make sure the car's protected. You don't necessarily see that anymore because people are driving their cars longer and they're not worth as much as they used to be, so there's coverage that can be removed. So the income, if you're talking about life insurance on a personal level to protect the income that you can make in the future so your family doesn't have to suffer, or you're talking about business income, which is what is sustaining the entire operation of the business, people consider their building and their stuff inside there. That's easy. That's stuff that everyone knows about to insure. But what's really important is that cash flow that's going to keep you afloat.
And would it also protect against, I mean, let's say you don't have a brick and mortar shop. It's not a restaurant. But you get, you hurt you're like Bill, who was just on a little bit ago, and you hurt yourself, and now you can't, you have a tough time managing your construction projects, things of that nature. Now
you're getting into the disability world, and that is different than your standard property and casualty insurance policy that would be on the business.
Okay, so I mean, it's kind of two separate animals.
Yeah, there's the injury to the individual, which would not necessarily be covered under your business policy or even your homeowner's policy or something like that. It's the destruction to where you work, the loss to where you operate your business. That's what the policy's providing coverage for.
And so you end up covering not only your income, but also your employee's income?
Right. So one of the expenses and that's where the business income or extra expense part of the policy, you've got to equate in there what is normal expenses, what is the normal operating cost of your business.
So the employees get a hell of a deal.
They could have a vacation
right?
and get paid for it, I guess, if you want to look at it that way. But in the scenario that I use, if you've got a chef who's fantastic in this restaurant and you don't want to lose that chef because they might be highly sought after by some competing restaurants in the area, like, man, someone's when something goes wrong for somebody, someone else is taking that opportunity perhaps, and you don't want that to happen. You need to continue to pay that chef because he's not going to she's not just going to sit there and get no income for 12 months.
While you rebuild everything.
Rebuild your restaurant. They're going to want to work. They're going to want to continue to grow in their profession and be a great chef and become known and, go on to sell books or be on TV as top chef or whatever the case might be.
The dream.
Yeah.
Open their Vegas restaurant, New York, multiple locations.
Named after
regular
them.
Wolfgang Puck over there. Tell me about how many people actually have enough of this insurance versus maybe being underinsured when it comes to businesses.
Wow, that's a tough question. I think the folks that are out there that have the comprehensive business owner policy, the standard BOP that you might hear out there, they probably have sufficient coverage because the industry term is actual loss sustained. And what that means is the insurance company is going to bring them whole again for the actual loss that they take on their income for 12 months or whatever the case is. It's the folks out there that operate a business that gets out of the world of the standard package policy where you've got to put it maybe together in the a la carte mode. Those are the ones where business income is a specifically calculated coverage that may be shorted in the, trying to save money on the annual premiums and that type of stuff. So that's the actual part that's calculated if you have an a la carte type policy.
And so all of these things, as you said, get calculated in, but we have a lot of people who do recruiting and come on the show, or business owners, small and large. And I think it's kind of an interesting fact to, even if you were to be able to tell your employees that you have this, like, look, you're covered. If something horrible happens, you're going to be okay. I mean, I don't know if anybody tells their employees that, but it would be a heartwarming discovery, I guess.
My recommendation is to make sure you have that conversation with your agent first, before you have the conversation with your insurance agent first, to make sure that what you're telling your employees is correct.
Is that something an employee could ask an employer?
I don't see why not.
I guess they could ask whenever they want, right?
Yeah, I don't see why they couldn't ask, hey, boss, what happens if this place burns down? Is there compensation for me as you rebuild it? Then, the employer might look at them kind of funny about, why are you asking that question?
Why is there a gas can in the back of your car? This is very peculiar.
Are you thinking you don't have to come to work and I'm going to continue to pay you? Is that what you got going on?
How many months of this do you guys have? Do you guys have like 12-month coverage on your place burning down?
Yeah, either that employee's got something up their sleeve, or maybe they're married to an insurance
Maybe they're
agent.
they're just listening to the show and they want to know.
They could be.
You wanted to bring up one other thing while you're here, and this is, it kind of tails on the employees of a pizza restaurant, which oftentimes are teens, and the misconception about liability not only with teen employees but also with teen drivers.
Yeah, this is something that Heather and I were chatting about a little bit, and it's something that's probably one of the most commonly asked questions when you have young drivers in a household, and it gets down to, am I legally shielded by taking Junior off my own policy, my own auto policy, and making him get his own policy?
And this is if they're under 18?
Even if they're over 18. Actually, if it's a family member, now we might get into some details here, but
sure.
If they're 80 years old and still your child living in your house, there's the potential of absolutely no coverage.
Did you say 80?
I did, and I was just trying to make my point that you could be over 18.
Okay, got it.
Living in the same house. So, where I wanted to go with this, and in the essence of time, I just want to make sure that the listeners out there in Radio Land, or when they download this to listen to it on the internet, be careful if you think you're trying to shield yourself legally by separating your son or daughter off your personal auto policy and they're still living at home. Just be very careful.
So it's a little bit more of, what do they call it? The intent versus, I can't think of the other word, but it's, the something versus, it's a law term. We need a lawyer. Somebody bring me a lawyer so we can figure out what I'm trying to. Somebody call in. We need something versus intent. It's the same thing we have in the mortgage business. It's like the primary residence versus the, right. Yes, you can say it's your primary residence. It can appear to be, but if the intent is not to live there,
right.
You get into almost fraudulent stuff, which I imagine insurance fraud's a big deal too.
Yeah, and I mean the wording of the policy, which we don't want to put people to sleep as they're driving their cars right now. The wording on the insurance policy has...
They're not. They're thinking about what goes with intent.
There you go. So they're not even listening to me anyway. I can't come up with what I'm trying to say.
Well, they're playing words with friends with me right now, and they are coming up with the Scrabble edition of intent and the other word that I'm going to Google before we come back from break.
Just be careful that the wording in your policy may exclude coverage in certain situations if you try and shield yourself legally by creating two separate policies within the household. That's what I want to get out there.
Because it really has to do with they're living with you. It acts as more of one policy than two separate.
It should be, and it should be done correctly. And we could get into some of the legal issues, but also some of, in my opinion, some of the moral issues that we have to indemnify or bring to whole the other party that we might hurt. And that is never a good thing if we're telling our young and maybe careless young drivers out there to just carry the state minimums. Well, if they hurt someone tragically, is it really the right thing that all we did it to save a few dollars, and the most that family of that 16-year-old daughter that now is a paraplegic because of the accident that your son or daughter caused, that the most that they're ever going to get is $25,000 and you just wash your hands of it? I really don't feel good about that.
Yeah. Well, Paul, thanks so much for joining us. And, it is interesting. Disasters do strike, and your book, Protect Yourself, goes so much deeper than insurance. And it really does talk about protecting yourself, your assets, and now, of course, your business and your kids and the kids your kids hit. When we come back, Heather is going to join us, and we are going to discuss all sorts of fun things. We're going to bring Bill Babb back. My name is Ben Brash, and that was Paul Pukis. You're listening to Brashenomics.